Welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. And for this edition of the show, we're going to have a little fireside chat focused on the registered investment advisors. And helping me do that is Rosenzweig of RZ Wealth and, Blaine, Aikin of FI360. Thank you very much for joining us over at MarketSite. And before we get into the discussion, give us a brief intro and a background in the business.
Sure. We're all alumni. Started at PNC many years ago. I started in 1991, and I was in bank brokerage for a number of years. Went independent about 10 years ago, and finally went from independence to the RIA channel. So along the way, picked up a lot of designations because I felt that it was the right thing to do to better serve my client, and here I am today.
All right, thank you very much. And Blaine, let's hear from you.
Well, maybe I'll touch on two roles that I play, one from a business perspective and the other in a volunteer capacity. So my primary business is with FI360. I serve as executive chairman. FI360 is a fiduciary education and technology company. Our purpose overall is to help financial advisors gather, grow, and protect investor assets, and we do that through the fiduciary processes. We publish a handbook on fiduciary practices. We also provide several professional designations, most notably the accredited investment fiduciary. And then we also offer some tools that help financial advisors and their firms to implement fiduciary practices.
And that's where I want to kick off the conversation today. We hear so much when we talk about RIAs, what's best practice for client strategy? How are you investing in the portfolio? But let's switch gears and talk about why it's important to further your education, and not just for your clients, but for the investment professional themselves. And what can they do to keep that going?
Sure. So I think a good way to think about it is when you posture yourself as a professional, it's very different whenever you're in financial services than it is with other professions like law and medicine. There's no direct career path. We know that whenever you go to become a physician, you go through medical school, you have this process of having a code of ethics and a body of knowledge that you pursue, but it's not true really in the financial services profession. Irv and I have known each other for a long time, and it's quite a process to become involved as a financial profession and professional, and even establishing yourself within a profession that is ill-defined as it is. So it's really important for financial advisors to establish themselves through credentials and through their experience and be able to demonstrate the proficiency that they have in the profession.
Right. Because it's not just about understanding the markets, you're actually running a business within the business. So Irv, what are some best practices that you've done throughout your career?
Well, again, I mean, we've incorporated investment policy statements pretty much across the board so that everything's laid out. It's very transparent. Most of what I do, I'll work out in advance. So if I'm doing a proposal, I want to see what that's going to look like. So we might use analytics like Blaine offers or Morningstar Analytics, so I can visualize what's going to happen. It's not just about stock picking. It's not just about sectors. Where are we going to end up? At least a snapshot of where we're going to end up. So we try to do that relative to what we present to the customer. Also, I think I mentioned this last time, I'm a bit of a control freak. So wherever I can control risk is what I will incorporate into the portfolio. A lot of people, and I said this before as well, focus just on historical returns, total return, and they're not doing anything that's going to have some predictability relative to either maturity values or things like that. So that's a lot of what we do. I'll take a big part of control wherever I can, and by doing that, you can actually take some other risk in other aspects of the portfolio once you know what this portion of the portfolio is going to be doing. So that's what I'll do.
I think that's an excellent point, because I think when people go into investments, the first thing they think of is, oh, how much money can I make on this? Right. What's the return? But professionals will look at it, okay, what's my risk? How do I mitigate that? And then they think about return. So my question to you, Blaine, is when a client is researching or interviewing potential advisors, what are some clues to discern who's a fiduciary first, and explain what that is versus a stockbroker?
Yeah, so fiduciary is a very important concept. It's one of the oldest and most revered concepts in law, that you're obligated to act in the best interest of the client. You have the duty of loyalty, which means to mitigate conflicts of interest or avoid them altogether, and the duty of care, to be competent in what you do. And so it really is an important role that you have and set of responsibilities. And not everybody in financial services is required to adhere adhere to a fiduciary standard. That's changing. There is quite a bit more pressure from a regulatory perspective to elevate the standards for financial services professionals, and also from a competitive standpoint. But if you're an individual who is seeking out financial advice, I would approach it like I would if you were going to select a doctor or an attorney. You want to know that they have that body of knowledge behind them, and so they should have professional designations. You're not a member of the bar, you are not a practicing physician, but so you have to be able to establish where is your credibility, what is the background that you have, and you should also ask directly to that financial advisor to say, are you in fact accountable as a fiduciary? And you need them to step forward and say that they are. So I would certainly look for credentials in that sort of a verification.
Right. So, or can you give some specific examples of how you would act as a fiduciary? So if I'm a client sitting down, what are some clues I should look for? What questions should you be asking me so I can identify that?
Well, before we even sit down, let's say we set an appointment to sit down, I'm going to send you what we call pre-appointment kit. I'm going to get all the background data that I can, so I can get a better sense of that client's situation, outside assets. I mean, you're not going to know really about risk until you sit down and speak with them one-on-one. But beyond that, where are their assets, a sense of their objectives, what their goals are. You really want a full picture, a 3D, not a 2D picture of that client's goals, what their interests are, what their risk tolerance is when you sit with them. And you want to get a head start. It's a struggle, I'm going to tell you.
I was going to say, are people comfortable giving that kind of information up with prior to having a sit
It's
down?
not comfort more so than the work. They sort of don't want to go through the work.
Right.
Or maybe they don't want to face the outcome of the work.
You have to come face to face with
You do.
your financial health, right?
Exactly. Very few people have a budget, and I keep telling, just use Quicken or use Mint or whatever it is. At least track where your expenses are going. Most people don't know, and without having some of that data, and without me knowing what I'm trying to target as an income first, how do I even start to manage the portfolio? That's the problem. I mean, if I don't know what kind of an income stream you want, I shouldn't even be starting to do an asset allocation model for that client, and that's a big hurdle.
Right. That's an interesting point.
Yeah.
So let's go back and talk about designations.
Sure.
What is the CFP role as an RIA, and if you don't have one, does it make an RIA better or not?
Right. So, well, it's a very good question, and I neglected to mention that volunteer role, which I currently serve as the chair of CFP board. And so, CFP board is the objective, the mission of CFP board is to serve the public by offering and establishing that certification for certified financial planners and upholding that standard for ethical and competent financial planners. And so, as Irv talks about, there is a process associated with working with clients. And so whenever you go through something like the Certified Financial Planner program, you have that financial planning process that enables you to walk through the client's circumstances, and you can really make them more comfortable in terms of exactly how you're trying to work with them to uncover what their needs and goals and objectives are, and then establish what is the right course of action for them based on those needs and objectives. And sometimes you're able to make them aware of things that they didn't even know were their needs and objectives. So I think that's where designations like the CFP, Irv has quite a few designations that work well for him. And in our case with FI 360, the accredited investment fiduciary is designed to help you understand what your obligations are as a fiduciary and fulfill those by walking through exactly, again, a process. Because it's all about really working with someone as a process. Again, I'd go back to like medicine. You go in to see the doctor, you know what the protocol is. They're going to have your records, they're going to walk you through where you stand, how you're making progress against your medical objectives and that sort of thing. So
let me ask you this question, because I posed it to a portfolio manager on the derivative side.
Sure.
My question was, how many designations are too much?
Right.
So what would you be, at least your baseline recommendation for someone who's serious about being an advisor?
Right. Well, it's a very good point, because there's several hundred designations in the financial services area. And many are very good, but many are not. And so you really do want to pursue what is behind that particular credential. I hold 3, and I pursued those particularly because I think they are highly valuable and well respected. One is the accredited investment fiduciary from our own organization, certified financial planner through the CFP board, and chartered financial analyst through the CFA Institute. Each one of those is a little different in terms of their focus, but very highly regarded and leaders in their field.
All right, well, let's talk about the overall market a little bit here. What are some trends, what are some questions that you're getting from clients, concerns, opportunities? Is there a common theme that's coming up as we go into the end of the year?
People are being swayed, the political news right now and socioeconomic news and things like that. I mean, there is concern, and I think rightfully so. I mean, it is an old bull market at this point, and then beyond that, you look at the participation levels and things like that, there is some level of concern. So I think you have to be extremely tactical. Whereas passive has worked very well, and you can still represent passive as a core strategy within the overall, I think you have to really pick your spots and get a sense of that. So, I mean, we do a lot of ETFs. We also do a lot of individual securities, but more so, from our option strategies. So we're either selling covered calls or we're selling cash covered puts with underlying stocks relative to that. So there's a lot of things that we'll do, but I would say a lot of what we're able to accomplish is really more on the ETF side. And I think you have to be open-minded. I think a lot of advisors, and that's really the benefit of the education, you start to get tunnel vision. If you don't go out and expand your knowledge through either the events that we all go to or through expanding your knowledge through the certifications and things like that, and that's a problem because there's a lot of new stuff out there and there's a lot of new stuff that works, whereas a lot of the old stuff doesn't necessarily work as well as it used to. So you've got to be open-minded, and you have to be progressive in that nature.
And Blaine, would you agree? Do you hear some of the same trends from RIAs that you speak with, concerns that they may have?
Yes, definitely. And Irv is obviously expert in the markets as well as the financial services state of the art, if you will. So I'll take it a little bit of a different direction and talk about where I think the overall industry is increasingly becoming recognized as a profession. And that's a huge, important change because unfortunately, financial services oftentimes has a low reputation within the overall environment with the public, and I think that's in large part because we've kind of morphed from a sales culture and more into now what I would say is a more fiduciary, client-centric, fiduciary professional culture. So what we're seeing is not only regulatory pressure to make sure that conflicts are avoided or mitigated, but also competitive pressure. As that regulatory environment has changed, we do see that more and more top-notch advisors are making sure that they are following the fiduciary obligations and pursuing the designations and being prepared competitively for an environment where the public is becoming increasingly aware of the need to select someone who is obligated to serve in the client's best interest.
Well, at the end of the day, it's a business within a business.
It is.
And your reputation is everything, particularly in finance. So that was refreshing to hear. Well, thank you very much for joining us at MarketSite. We hope to have you back. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.
Thank you, Jill.